Welcome to the BankTalk podcast, the show where we talk to leaders and experts from the community banking sector. Whether you are a current CEO or aspire to be one, this podcast will give you valuable insights and advice on how to run your financial institution better. Each episode features a different topic and a guest who shares their experience and knowledge with us. Tune in and learn something new with BankTalk podcast.
Hi, and welcome to BankTalk. I'm Charlie Kelly, your host and partner at Remedy Consulting. Today we are talking ACH. And as most of you likely know, in the ACH world, there's a lot of fraud activity going on. So I reached out to Sean Carter, who is the president and CEO of the New England ACH Group. And typically when I have a potential guest come on to BankTalk, I ask a question, and that is, what's the most interesting thing going on in your space these days? And Sean had some pretty interesting answers to that. So I thought, well, let's see if we can make a podcast episode out of it. So without further ado, let's get to BankTalk. Okay, welcome back to BankTalk. Today I have with me Sean Carter. Sean is the president and CEO of the New England ACH organization, now known as NEACH. And Sean, right from the get-go, I screwed up your organization's name. So you were formerly known as what?
It used to be called the New England Automated Clearinghouse Association.
Okay.
But now we're referred to as NEACH because we're beyond ACH.
Excellent. Well, thank you for joining me today. I appreciate it.
Thanks for having me.
Tell us just real briefly what NEACH is, what you do, what the mission is, whatever you think might be relevant for background.
Sure. NEACH is a trade association. So we're made up of banks and credit unions, primarily in the Northeast. So we have about 385 bank and credit union members. We have another 80 or so companies that can be fintechs, third-party providers, vendors, and those are more spread out than our financial institution. And our main mission really is to ensure people have success within the payment systems, making sure that they're safe and sound, and that our members are processing payments in compliance with applicable rules and regulations, as well as managing the risks associated with that. So our primary way we do that is through education, right? So we do a lot of educational events. We have NEACH University, which allows people to take courses in a given path related to operations or retail. And then we do some advocacy work, which is we help write the NACHA operating rules. We're a voting member of NACHA. We work with our members whenever there's requests for comments to get their input to see which way we should go with those. And then lastly, we do have some committees that our members work on. We have a fraud committee, which is really relevant for our talk today. We have a fraud committee where our members get together and just talk about things that are happening. And from those conversations, we try to create training, create conversations nationally that help them get results.
Okay. If you were to pick out the biggest threat when it comes to fraud, the biggest threat related to business fraud or fraud for a corporation, what do you have? Is there a one-word answer there, or is there one idea? Or is it, there's 30 things that...
Yeah, there's a lot, but the thing that scares me the most, so I'll say it this way, is the simplicity of how payment fraud occurs at companies, right? So we think back of, back in the mid-2000s through 2011 when it was really sophisticated. Somebody would do an online account takeover, and they would gain access and change the admin on a banking account and push money out, right? And I always thought that was sophisticated, right? Whether the person doing it was sophisticated or not, we could debate, but I always felt that was sophisticated. What we hear a lot about now is, and we see it, we get attacked as a business as well, is these simple things where they're trying to get, whether it's because we're not all together anymore or businesses are just getting so reliant on email, where they do a simple email pretending to be the CEO or the CFO, and they get somebody to send out a wire transfer or push out an ACH credit. To me, that's the scariest thing I see for businesses, because I know, especially at small businesses, which we are, how busy it can get. And so I just get it, that I see why it happens. And to me, it's just so simple that scares me, because I think it's underreported what you hear about, right? So there's billions of dollars in losses that people will talk about. I think that's really underreported, because people aren't always lining up to say they fell for something like this, because it can be embarrassing, right? Nobody runs around at holiday parties and says, "Oh yeah, I was the guy at Nike that pushed out the $200 million fraudulent transfer," right? So
Sure.
I think some of this is underreported, and some companies, I know from talking with our financial institutions, they don't even let their bank know because they're embarrassed, right? They just kind of take the hit and hope that their cyber liability insurance covers them, which probably it's not going to, because they did something foolish. But yeah, so I don't know if that's the biggest threat. I would say people would say data, right? You don't want your employees' information stolen. So there's a lot of threats, but what scares me is the simplicity in which how payments fraud can occur in a business,
Okay.
right?
So
Yeah,
can
that's
I
what I
ask you a
think.
question on that? So in that scenario, if I understand the scenario, it is what? Somebody getting control of the president's email, taking
Correct.
the email over, shoving out that email that says, send 200 million to Sean.
Yes.
And next thing you know, Sean's in the wind.
Yep. Or they receive an email from somebody who took over a vendor's email account and said, "Hey, change the payment instructions
Oh, yeah.
going forward," right?
Yeah.
So it can happen at your location and somebody that you're doing business with, which to me that's why I think it's scary, because you could do everything right and still have an issue, right? That to me is scary. Like when we used to talk about online banking and the takeovers, if the bank did a better job securing the website and you locked down your side, you were pretty much okay, right? And now you have these where somebody else could have a challenge from an IT standpoint, and you're pushing out payments, and then a week later the vendor says you never paid me, and you actually did, but you sent it to this new routing and ABA number. So I really get nervous for businesses, because we are pushing people electronic, right? Not to say that electronic payments are nearly as risky as checks, right? We know what's going on in the check world. Fraud is exploding. Again, there's all kinds of studies done. The Federal Reserve Bank of Boston just published a great article document on why is check fraud on the rise again. So that'll scare you if you read that. Um, but we have pushed people to electronic payments, which there's a lot of benefits to that: cost, convenience, speed, and in theory, they should be more secure than the check. And it's not always the case, right? So,
I make a phone call into my bank or credit union to say, please make that ACH payment move. It sounds to me like the majority of the fraud is inside the business. So somebody's faking me and telling one of my underlings to move the money. But is there also a scenario where somebody from a company calls in and the ACH manager at the bank makes a wrong move? Or is that sort of part of your job to eliminate that? And
yeah, I mean, hypothetically, that could happen, right? So you could have fraud, internal fraud. We don't hear as much about that. Again, maybe that's hopefully underreported, right? Because our members aren't going to call Nietzsche and say, "Hey, I'm trying to rip off a business. How do I do that with ACH?" But again, it is that simple, right? So if you were giving or taking wire instructions over the phone, right? As long as you repeat back the right number, but write something else down, I wouldn't know what you're entering, right? So
Gotcha.
that in theory could happen. Now banks, right? Obviously, banks and credit unions, we would expect that their hiring practices, because these are sensitive roles that people are being put in,
Sure.
they're making sure that they get the right people. But I
Well, No,
Again,
no, and I guess the scenario that I was talking about is if I, as the business owner, is not the actual person that makes the call.
oh, so you're getting spoofed. Yes.
Yeah, they're getting spoofed on that. Meaning the person isn't who they say they are on the other end of the phone or whatever, or however these transactions are going through.
Yeah, so that is occurring, right? So we have some of that, the deep fake stuff. So there are things that financial institutions do to try to combat that. But if you have all the information, if you have my PIN, if you have all the codes that you need, right? I may be assigned a wire PIN code or an ACH code when calling over the phone.
Mhm.
If somebody has that, then both sides are technically following the agreed upon security procedures. The file's probably going to go out.
Yeah.
And then after the fact, we realize, hey, this shouldn't have happened. That's what we talk about when we say the authorized party was manipulated. So if you were to categorize the type of fraud that falls under,
Yep.
it's not truly an unauthorized item. It's simply that the authorized party was compromised, right?
Yep. Gotcha.
Yeah. So,
Okay, so then one other scenario.
Yep.
I always thought that there was this threat. Okay, so you as a corporation set the rules, and the rules are, never click that phishing email, right? But there's a couple of folks that may and HR can't slap their hands, right? Is that still a thing? Or, and again, I'm talking about CEO, of course, right? Or the somebody higher than the head of the HR department or whoever's sending the policy out, right? Is that still a thing, or is that I know it used to be.
Yeah, no, that is still the education that people are provided, and that when you do your security training on an annual basis, that's what a lot of it is about, is making sure that the users on the system
Mhm.
aren't making those types of errors, or clicking on a link or downloading, or going places they shouldn't go on the web. But the challenge with that, right? So this is my bigger pet peeve with our industry, is that we've solely relied on, hey, we're gonna have the banks educate the end user that they need to be better, right?
Mhm.
So they need to have better IT hygiene, right?
Okay.
The challenge with that is, even if we hold an education event at a bank, let's say, I do a lot of fraud events with financial institutions. They invite their customers, right?
Mhm.
Maybe you get a third of the customers, but that's not even everybody from that one third of the customer base, right? So unless that person's taking that information back and talking to everybody in the company, and everybody in the company is perfect 100% of the time, this is going to be an issue, right? So
Oh yeah.
I
The
think
train the trainer
it,
concept.
you have to be perfect, and I don't think that's reasonable. I don't think we should ever think that everybody at every company is going to be perfect, right? And so the bigger thing that we have to do is what's beyond that, right? What other controls? Multiple people reviewing a payment file. The example you gave before is a great one, of the CEO email gets taken over and the CFO gets directed to, by email, to send 200 million out. What we should really be telling people is, hey, CFO, stop, pick up the phone and call the CEO, right? And don't just rely on an email instruction when it's something like that, right? If it's something out of the ordinary, that, hey, why wouldn't Jim, the CEO, have told me we're purchasing this other company, right? You're the
Right.
CFO. You should be involved in those conversations, right? So
So kind
we
of that
have to,
dual authentication,
yeah,
whether you call it, right. I mean, it's
yeah, all of that stuff we talked about to help defeat online account takeover, right? Education's one of them. I'm not saying that that's not effective, right? We're an education company, so we better hope education's effective. But I think there's got to be that same multi-layered approach that we had to helping prevent online banking takeovers. We have to share that model down to companies to help themselves in this fight against fraud. And again, when you think about a financial institution or people like me that are in the industry, this is, yeah, we get it, we understand it. A lot of people are just trying to do their jobs every day. And, until they're told what the impact is of clicking on that bad email, right? You said the HR slaps them on the hand. I have a better approach. I think we should be telling people, hey, when you fall for these things, some kid gets sold on the internet, right? When you fall for one of these things, some organized crime ring makes more money to go do something malicious around the world. I don't think we're doing enough to make the end user realize that, hey, it's not just a company policy to use your computer inappropriately. You're putting other people at risk by doing so. And I think when you do that, people take it more serious.
Yeah.
Do you remember in the 80s, the drunk driving campaigns, right? And those came on the TV and people, those deaths went down, right? Because people saw the commercial of an accident and a family's destroyed and ripped apart. It didn't get us to zero, but it made a difference, right? The
Yep.
seatbelt commercials.
Sure.
It made a difference. We had this public awareness campaign and then followed up with some regulation, right? I think we have to have that same model when we talk about fraud because we have to do more than what we're doing today. Companies they're just so overwhelmed and there's so much of it out there. We need to help them. The industry needs to help them. It's
Okay. So I'm going to pivot a little bit here, Sean, and ask you another question. We had talked about when we prepped for this thing, the discussion kept coming back to what you were calling a Fed fraud classifier. So set that up a bit for me. What is the classifier? Why is it important? And who uses it? Or give me an understanding of what that means in your space.
Yeah, so the Federal Reserve has gone through over the last since 2015 something called the Fed Payments Improvement, and they created a security group out of that. And one of the subgroups from that was a definitions work group. And I know somebody listening may say, "Oh, why are we creating a definitions work group?" Well, when it comes to fraud, it's really important that we all define terms the same way. And so this group actually not only defined the terms, but they've created what's called a fraud classifier model that financial institutions can use, right? So the organization reaches out to the financial institution, says, "Hey, I had fraud on my account." The financial institution can then start asking questions like, "Okay, who initiated the payment? Was that person that initiated the payment, were they an authorized party? If so, then it goes down a series of other questions, right? So if it was an authorized party, but it ended up being a bad transaction, what happened? Were they manipulated? Did that authorized party act fraudulently? Was it modified payment information? And then we can go with, okay, how were they manipulated, right? How did the authorized party act fraudulently? And once you do that, you can start seeing where the problems are in a given payment system. And that's when you can write better rules, better regulation, better guidance when we all have a true understanding of what's actually happened, right? So
But you're saying by categorizing, if you can get them in the right categories, then you can find patterns?
yeah, so if you think about it, better fraud data is going to equal better defense, right? That's the motto that the Fed's using for the fraud classifier model.
Okay.
And it makes perfect sense because you can start to bucket these issues, right? When you just say, oh, there's payments fraud in the ACH, Nacha, go fix it. Okay, well, what is it? Where's it happening?
Yeah.
Who's at fault? Is it the originator, the receiver? Is it the ACH operator? Where does the problem lie? When you start breaking it down and you define it and you get the industry talking about it in the same way, to me, I think ends up happening is you start getting vendors get a better understanding of what happened. They create better tools.
So help me out. Is something changing in that space, or is this a new thing, or is this
It's relatively new. So a few years ago, they came up with the definition, and then they created the model, which is, it's not widely adopted yet. There are people using the model. We would love to get more people using the model. And anybody listen, just go to fedpaymentsimprovement.org And you can look at fraud classifier model. It's a very simple thing as a financial institution to incorporate. They give you the tools you need to incorporate it and use it. And I think once we have that, and it's going to allow for better sharing of information, so we can then go and, for example, Nacha can write better rules or better guidance. Education companies like ours can take that information and say, okay, this is what people need to learn more about. IT companies could probably take the information and make certain changes, and financial institutions can have a better understanding of maybe where they can help better. So it's a newer approach to payments fraud. We've been trying to tackle payments fraud forever, right? And there's always seems like there's different people doing different things, trying to get to the same result. And sometimes that doesn't get you there.
Yeah, because you don't have a standard or something.
Exactly. It takes everybody working off the same music sheet, so to speak, to create that music. And if we had more time, the model, we could walk through an actual payment and you could categorize it, right? So it's really easy to use. I suggest everybody listen and go check it out. It's a very simple. I think it's great because it's so simple.
Let me just run a quick use case past you.
Sure.
We end up with the business fraud we were talking about before. So the fraud has occurred. Somebody at that point has notified, let's call it the credit union, or let's call it the bank. Right. Yep. So somebody in the ACH team, well, again, I'm using a simple example because I know this is not just ACH, yep, but has said, okay, all right, customer called, there's fraud. Is there a post-mortem, and that's where this classifier happens?
Yeah. So what would end up happening is that financial institution, after dealing with that customer, they're going to take the information. They'll give them some guidance on how to resolve it immediately. But when you put this in here, the financial institution might be able to say, oh, wow, that's now the 11th situation. That's the same thing.
That hits all those triggers.
Yeah, let me start reaching out to other parties. Maybe if it's all ACH, let me reach out to Nacha's fraud team. And then Nacha can alert the network that, hey, this is going on. Or they have their own, chat groups or networks on LinkedIn. They can start saying, hey, is anybody else seeing what we're seeing, right? So it's kind of after you triage the situation, it's really a tool. It's like an aftermath thing to say, okay, what really happened? Who was involved? Are we seeing this elsewhere? And can we share this to make sure other people don't get victimized, right? Because once one person catches on to something and they reach out, and if it gets stopped at one bank, stopped at another bank, most likely that ring's going to fall apart. And once it falls apart, there's no telling how many thousands of people have been saved and how much money has been prevented from being stolen, right? Because if the train keeps going, you see those totals of the money lost. But if the train gets stopped, those losses don't happen at future stops. So this is really what that is. It doesn't prevent anything with that individual customer. That customer's already had the challenge. So this doesn't stop anything that happened when you were alerted, but it's a downstream effect for understanding what's going on. So it's like when you're the first person in the neighborhood that alerts the police that your car was broken into, and then they put on the Facebook page, anybody on that street, lock your car, right? This is kind of what that is.
Yeah, and I would think that, and again, maybe this is the same issue, but I would think the same thing would be true of like a SARS or anything like it, right? If let's assume that there's somebody at the FBI, at the wherever those things go. Right? Let's assume that there's the first thing in the morning that person is picking them up and trying to determine patterns. Right? I would imagine that patterns mean an awful lot to breaking down one of those rings.
Yeah, and so the SARS process, that's an interesting comparison, because the SARS suspicious activity reports, there's certain criteria that get met for somebody to have to fill out a report. And then there's certain areas and different law enforcement agencies sit down at certain points, quarterly, monthly, and they go through those. And they're doing the same thing. They're going, okay, who's doing what? Where's it happening? This can almost act faster than what those folks can do on the SARS side.
Oh, I bet you. Yeah, I get you.
Yeah, and so it's very similar to what they're doing, though. They're trying to analyze the data, who's involved, trying to figure out what's actually happening. And this is very similar to that. It has the same network effect, so to speak, that what those guys are doing on the SAR side.
Okay, so I had one other question, and that was related to insurance. You had mentioned insurance before, and what insurance covers and does not cover. Could you just extrapolate on that a little bit? You said theoretically there's always an insurance so the bank gets some coverage in the event of fraud, and that has occurred. The same thing would probably happen with a company. You got some fraud insurance if you're doing a lot of ACH or a lot of money movement.
Yeah, so on the bank side, they have their bonds and all the stuff that guards them against fraud. They also have their agreements with the customers or their security procedures if they have to pass liability. When you think about a company, some general business policies will not cover internet crimes, right? And so what's been the trend is, and some institutions require their customers get cyber liability if they're going to use online banking and that type of stuff. The problem with those insurance policies is you really have to read as a company, when are they going to pay out? If there's a whole list of things that have to be met in order for you to show that you've done proper internet hygiene before they'll pay out a claim, most likely if you were doing those things, you wouldn't fall victim to a payment fraud, right? And so
yeah, I see.
it seems, it's
right. Yeah, it's sort of
cyber's bad. I'm not saying the insurance is bad. What I'm saying is that once you get that cyber insurance, you can use that, what they're expecting you to do. That could become your outline for your security policies and procedures as a company. If you don't want to hire an IT company to come in and do that for you, go get the insurance, but see what those standards that have to be met. Like there's a cyber security standard called the NIST. Companies can follow that, or you just look at what your insurance company would expect you to be doing, and you're probably going to be a lot safer once you implement those things than you are today. And hopefully you never need to file a claim, because if you're doing all of those things, the risk is going to go down, right? So
right. So it's sort of like the questions are set up to help prevent everything, but if you don't check all the boxes,
it's going to be hard to get.
You're paying for it anyhow, right?
Yeah,
to some degree.
Yeah.
Okay.
It's like, it's like car insurance, right? You haven't protected in an accident, but if you drove like a knucklehead, you're still going to end up paying, because they're not going to, you did something that made them not want to cover you. So it's the same idea. And one of the things that I think happens sometimes, I know when I'm talking to businesses about this, they'll say things like, "Oh, we're not worried. We have insurance." It's like, whoa, that's not the right that's not the right attitude, right? I'm glad
they're using it as a reason not to follow the rules.
Exactly.
Like that.
Yeah. Kudos, congratulations for getting the insurance. That's a great step as a business. It's very wise, but I think people can take more advantage of cyber insurance than they actually are. You could use it to model out your security infrastructure, and that will put you in a better position than just having the insurance.
Okay, great. All right, Sean. Well, this has been great. I really appreciate your input here. Anything else going on in the industry you think the listeners should know about, or anything keeping you up at night?
Yeah, so I think your listeners should be paying close attention to what comes out of NACHA, the national rulemaking body for ACH. They created a risk framework last year to address the rise in ACH credit push fraud, meaning the fraud we've been talking about. Somebody gets tricked into sending a payment somewhere. They're looking to make some changes to the rules. That should be coming out shortly. You can go on nacha.org. You can see what the proposals look like. There's a couple that I'll point out. First and foremost was that kind of a shift in thinking in ACH has always been predicated upon the originating bank, the bank that originates, or the credit union that originates the payment, has really always been the party that we hold responsible. That's not changing, but there is going to be a little more onus put on to the receiving depository institution. So where the bad guy actually holds their account, there's going to be some expectation put on those receiving financial institutions that would look out for accounts that might be set up, a brand new account, all of a sudden getting a bunch of transactions from businesses. They're not a business themselves. They're a consumer. That's straight, just looking for that
common trait or something.
Yeah. So making sure that the RDFI has a little bit of stake in the game And then the other one, looking at reversals, then the ACH network, we don't typically allow reversals when it's just because it was fraud. So that was something they went out for proposal on, was to say, hey, well, could we allow for the network to be used for reversals when somebody realizes they've been had? And so I think those are two things that are really different, that never have been done in the ACH before. A little more expectation on the receiving bank, and then expanding potentially the use for reversals.
Not to delay this or send it too far down a path, but a reversal then is not, if it's not used for fraud, it's typically used when it was sent in error.
Yeah, error or erroneous payment, like you sent it to the wrong receiver,
Okay.
a wrong amount, a duplicate. Yeah, it's typically for operational errors.
Not policing, you were saying?
Yes,
No,
yes, yes.
okay.
Even though you could send it out to do that, there's no real way of knowing. It hasn't been allowed. They would kind of codify that you could do it, right? So there may be people doing it today, but yeah, that's what they're looking at. So I just think those are important things to watch out for, because they're different than what we've done in the past.
Gotcha. Well, very good, Sean. I really appreciate you spending some time with me today. Thanks for joining us on Bank Talk, and thanks for your input. I think it's been really informative.
Yeah, thank you for the conversation. It was great. Thanks for having me.
Okay, so that's it for Bank Talk. Thank you for listening today. Have a good day and keep on learning.
Thank you for listening to the Bank Talk podcast, brought to you by Remedy Consulting. To reach out to Niche, it is NEACH.org. Go to their website at NEACH.org. And they also have a really great podcast called Wrestling Payments. Thanks again, and we will see you in the next episode.